Okay, so we are starting now. On and off vessel. They just need to take our light for this side. So can you guys see my screen? Drop your reply on the group. Can you guys see my screen? Okay, okay. So, all right. So, you are welcome to the day one of this class, this live session. I know say most of them are new for here, so you guys are new. The new ones, I know you don't know what forex trading is about for now. So you will know it. I will just do a quick recap on that. I'll do a quick recap on that. But some of my students are already here who already know the basics, so I'll try and make it fast. Then what I will do for you, eh, I can link you with some of my students so that you go just dey ask them questions if you are confused, they can put you through. They already know the basics. You understand? So first of all, what's forex trading? The word forex, the full meaning is actually foreign exchange. Foreign exchange. It is the buying and selling of. It is the simultaneous buying and selling of currencies. You understand? So what we do here is that we buy currency and we sell currency. Yes. If you are seeing my screen, you see here where my cursor is now. You see Euro USD. So this particular chart is on Euro USD. Now, Euro is a currency, USD is a currency, and we are trading Euro USD together. Together, they are called currency pair. So, as a currency pair, you have two currencies together to trade with. So, you cannot trade forex with just one currency. One currency, no. Like if you just they trade normally, they trade only Euro. If you are trading, you are either trading Euro USD, GBP USD, and let me show you guys. There are many currencies you can trade. Yes. Then look at it. All these ones are Euro USD. Let me remove it so that you see other ones. So you see, this is Euro USD. We also have USD JPY. You can see Euro slash United States dollar. Then we have US dollar slash Japanese yen. We have US dollar slash Canadian dollar. So what it means is that if you are trading forex, you are trading two pairs of currencies, two different currencies together is what you are trading. And so because we are trading Euro USD now, what we are actually doing is that we are trading a major currency. You can't see my screen. What about the rest of you? Can you see my screen? If you can see my screen, just signify. Oh, okay. Oh, shit. What do I do now? Maybe it's your network. Oh, maybe it's your network. You can see the screen, Abi. It's your network. It's your network. It's your network. It's your network. So can you guys see it now? Can you see it now? Okay. So this is what you're seeing. Then you're supposed to be seeing my screen now. You're supposed to be seeing my screen. You're supposed to be seeing my screen. You're supposed to be seeing my screen. Oh, so how do we do this? Wait. Share screen. Yes, no. Share screen. Screen. Wait. Can you see it now? Can you see it now? Okay. So you guys can see it now, B. Uh-uh. Israel, you still can't see it. She can see it now. You guys are supposed to be seeing it. Okay. So wait. Oh, this one is not even moving. Oh shit. What about now? Can you see it now? Okay, if you can see it, indicate. Promise said she can see it. So what about the rest of you? All right. That's good. Let's start. Let's go on. Okay. So now, as I was saying, this is Euro USD. Now, in a currency pair like this, we have two different currencies put together. We have our base currency and we have our quote currency. Now, our base currency is this euro. Then the quote currency is the US dollar. But if you go to other pairs, where we have maybe GBP, JPY, Euro USD, or whatever, like NZD, USD, this NZD is your base currency, the USD is your quote currency. That's to say, whenever you are trading Forex, your first currency among your pair is your base, and your second currency is your quote. You understand? So, with that being said, what do we do with these currencies? We actually analyze the market to know where the direction they are going so that we can place trade. Now, whenever you are trading, you are either buying or selling your base currency. You're either buying or selling your base currency. So if you are Joseph, which screen? Can't you see my screen? Can you guys see the screen? Okay, I'm on trading view. Can't you see it? Join the live. The live is not on my Telegram community. Join the live on my. Let me drop the link here. Let me drop the link to the live. Let me drop it here. Alright, guys, please, you can do me one favor. Just share it on your WhatsApp status so that other people can join. Do you understand? Share it on your WhatsApp status so that other people can join. Yes. If you are not on my Telegram channel, that's why you are not seeing the the live. Maybe you are not here. That's why you can't see the live. Let me share it. Let me see if okay. Let me see if I can drop the link on the group. Okay, this is the link to the live. Just join the live. Join. You will see my screen. Okay, so can I continue? All right. So as I was saying, now what we simply do is that we buy or sell the base currency of any currency pair you are trading. We buy or sell the base currency. So what we are going to be doing tonight, for those of you who are new, I know you don't understand everything I've been saying. I will have a personal class with you guys later, maybe after this live or tomorrow. I will have a personal class where we explain all the basics for you, but don't worry, you will know it. But tonight we want to do something different from just learning what is Forex and all those stuff, because majority of the persons in this live, they are more advanced. Yes, they are more advanced. They know all those basics already. So today we have been dealing on candlestick anatomy. That's what we have been talking about. So today we are just going to do it live so that we can see the chart. And under candlestick anatomy, we've talked about types of candlesticks. And I told you guys it is not the name you need. It is the message, the language that are speaking to you. That's what you need. You guys already know Doji, you know Dragonfly, you know all those stuff. Now, if you are new, don't be confused. You will get them. If you are new, don't be confused. I will teach you all those things. But just join the live, just join now so that you can get the insights. When we start those ones, you won't be confused. You understand? You won't be confused. Mm. So that's it. So we have talked about doji, and I told you that under doji we have a lot of doji. There are different types of doji. We have dragonfly, we have gravestone, we have the common doji itself, the normal one. And I told you every doji has what they are telling you. Like this one, this particular one is dragonfly. This small one here, let me zoom it out. Let me zoom it out. This particular doji is dragonfly. Now, what this candle is telling us here is that at this 15, because this is 15 minutes time frame. I know we haven't done top down analysis, but this is a 15 minutes time frame. So every candlestick you see here represents 15 minutes of what the market did. So this particular candle is called gravestone. It's called dragonfly doji. And what this candle is telling you now is that when it opened, let me show you where it opened. Because it's a bullish candle, so it opened at the top here, this particular top here. Then what happened was that buyers took the price here, but sellers dragged it down. But at last, buyers no still gree. What happened? They dragged it to this point. So sorry, it opens here and it closed here. They dragged it to the top here, so it closed above. And what do you see? I told you guys, whenever you see something like this at the bottom of a downward movement, it can trigger a buy, it can trigger an uptrend. So this is what we have here, boom, down to this point. Before we saw gravestone, you understand, this one is a gravestone doji. So what happened? The price fell to this point. You understand? So that is how it works. That's how it works. So today we are going to be looking at market structure. Market structure. Now, if you are new, can you guys hear me? Can you guys hear me? If you can hear me, just type yes. Okay. And you can see my screen too. All right. So now, if you are new, carry your book and barrel and start writing everything you can write. Or if you cannot write, no worry. I will upload this. I believe I will upload this video on my YouTube, so you can watch it there later or anytime you want. But today we are looking at market structure. Market structure. So by the word market structure, I believe all of us are supposed to understand what the word structure is. Okay. The word structure has to do with a building. It has to do with building something together. You understand? So when we say market structure, we're actually talking about how the market responds, how the market moves. Yes, market structure, how the market is being built, how markets form. So the way the market is the form, then the market structure, you understand? Why is this thing coming up? Leave here. Okay, let me just. What's happening? Yes, I'm coming. I don't know. Okay. So now, market structure, as I was saying, what is market structure? It is how the market is being built. The way the market deliver price is called market structure. The way market deliver movement is called market structure. Now, why is market structure important? Market structure is important because without the knowledge of market structure, you cannot trade. Because we move along the structure of the market whenever we are buying or selling. You understand? So without the knowledge of market structure, you cannot trade. Just forget about being a forex trader if you do not understand market structure. So now, under market structure, there are three types of market structures. Now, when I see three types of market structure, I simply mean there are three ways the market deliver price. You understand? There are three ways the market delivers price for us so that we can trade. Now, let me check this out. I'm coming, guys. Okay. Let me Let me do this now. The first way market deliver price for us is called, I'm coming. All right. Okay. I say there are three ways market delivers price. Hmm? Now, these three ways, it can basically be classified in two. It can basically be classified in two forms. Yes, either a trending market or a ranging market. So the market can either be trending. Let me write it down. Trending. The market can either be trending or ranging. You understand? I don't know whether this range is correct, but just on the RANGINGS. So the market can either be trending. Wait, this my trending is not correct. Okay. The market can either be trending or ranging. Now, these are the two forms of market structure. We have market structure, the two forms. The market can either be trending or ranging. Do you understand? Do you understand that? If you understand it, please just tell me yes on the comments so that I'll know. Can you hear me? Can you guys hear me? Okay. So I said the market can either be ranging or the market is trending. Now, what is a trending market? A trending market is actually a market with a direction either to the up or to the down. That's why I told you there are three ways price deliver. There are three ways market delivers price to us, but these three can be classified in two: ranging or trending. Now, under trending, we have the uptrend and we have the downtrend. Okay. Under trending, let me write it. Under trending, we have the uptrend, we also have downtrend. You understand? Under the trending market, we have uptrend, we also have downtrend. Then under the ranging, let me still write it here. Ranging. We also have the sideways market. Sideways. Okay, let me add this one to it. Okay. They're kind of the same though, but for me I give them different name because both of them are not, they look alike, but there's a difference between them, a little difference. We'll go through it when we get there. Okay, it's called chubby. Sorry, BBY. Chubby. So we have trendy and ranging market, and under the trendy market we have the uptrend and the downtrend. Then under the ranging market we have the sideways market and the chubby market. Now, please pay attention to this class very well. What's an uptrend? An uptrend is actually when the market is heading to the upside, when the market is going upwards. When the market is going upwards, like what we have here. I know this is an uptrend from this particular point now to this point is an uptrend because you can see the market is going upwards. Now, a downtrend is when the market is coming downwards. This is a downtrend as well. This is a downtrend. So the market is headed down. So that's downtrend. So I will understand. Do you understand? If you understand, just signify. uptrend when the market is going upwards, like what we have here from here to this particular place. The market was trending upward. So downtrend when the market is going down, like what we have from here to this particular place, even to this particular place, is called downtrend. If you don't understand, just type it here so that I can go through it again. Then you understand. You understand? So now this one too is also a downtrend. Sorry, it's also an uptrend from here to here. That is also an uptrend. Okay, let me explain again. I say we have two types of market structure. The first one is the trending market structure. The other one is the ranging market structure. Now, under the trending market, we have two types of trending market. We have the uptrend and we also have downtrend. Uptrend is actually when the market is going up. Okay, let's use real life. Let's use real life now. So take for example now, you went to the market today to buy a pair of shoe and they told you the shoe is 50,000 naira. Yeah? So you were like, no, it's too expensive, I can't buy it, and you left. You go again tomorrow, the shoe is 55,000 naira. You left, you go again the next day, the shoe is 60,000 naira, and so on and so forth. What's happening is that particular shoe is trending up. Let's use it like that. Because why? It is increasing in price. So whenever the market is pumping, going upwards, we have uptrend, like what we have here. Now, that's not all I will tell you about trending market. I will explain what this thing is about. But I just want you to know first that a trending market has two types. And the first one is the uptrend, when the market is actually heading upward, like what we have here. From this particular point here to here, the market trended to the upside. You understand now? Then we also have downtrend. This is when the price is actually coming down, like what happened here. Okay, in case you don't know, let me explain what these particular numbers here. This number represents the price of this currency pair. You understand? So if you see this line in the screen of my laptop, this plus line, just look at this plus line down to this point. You see that the number is changing. All of them are price. They are all price. They are all price. So now, when this currency was here, the price value was 1.18274. 1.18274. That was the price value. But what happened? Let's check the current price of this pair now. This is, let me zoom it out. This is the current price of the pair. This particular place here, where you have this blue. You understand? So currently now the price is 1.15914. What happened is that the price fell. So what the price fell, sellers took over the market today. So from here, from this particular place, this particular price to this particular price now is called a bearish market. So this particular place where the price is, this blue one where you see the time counting on that's the recent price of the market of this currency pair. You understand? So now the way these prices are being delivered is either it's delivered to the upside or to the downside. If it is delivered to the upside, we have it as uptrend, like what we have here. From here, the price came here. Abi, do you understand now? Do you understand now? Dr. Aaron, if you understand, just signify, let me know. Okay, you understand now. So it's the same thing for the bearish market. The same thing for the bearish market. If I use the term bullish, you know I'm talking about the market going up. If I use the term bearish, you know I'm talking about the market coming down. So the bullish market is actually when the market is trending up. Then the bearish market is actually when the market is trending down. You understand? Great. So now, the next thing I want you guys to know is that yes, I will explain ranging market. I'm not there first. I'm not there now. I want you guys to understand the trending market first. You understand? So I'll give you guys assignment from this. So just be patient. I will explain the ranging market too. I will do that. So now, when we talk about uptrend, there are things we want to consider to know that a trend is valid, either to the up or to the down. There are some things you must look out for you to know that, okay, this trend is valid. This is an uptrend. This is a downtrend. You understand? So now, what are those things? Let me show you guys the things you must look out for whenever you are trading. Okay. So starting from this particular place where I have this blue line under, let's start from there. Now the price was once here. It came up to this point where my cursor is now. Can you see it? It came up to this point, and from this point, what happened? The price came down back. Yeah, it came up again. It came up to this point. It came down again. Came to this point. Came down again. Okay. Let me do it like this. Let me draw it out first. Now, for you to have an uptrend, this is what you want to see. This is what you want to see. I will explain it. Don't worry, I will explain it. So you want to see the market, the price doing something like this. You understand? So this is an uptrend. Now, why is it an uptrend? This is the place the price started moving from, and this is where the price is now currently. So it means that the price headed to the upside. So the price is actually bullish, going upwards. Now, if you take note of something, you can see the way the price is going. It's not going with a straight line at all. You don't know, that's not how price work. If price go like this, it just go up like this, it is considered an imbalance. Remember, when we started this Forex class, I told you guys that a market is a place where you buy and sell. So this place is a marketplace. You understand? So if you only have buyers in control, like what we have here, bullish market, the market is just heading up. This is buyers in control. The market is not complete. Market is not a place where you buy. Market is a place where you buy and you sell. So if you're only selling, that's not market. And if you're only buying, that's not market. In fact, for a market to form, it must consist of both buying and selling. So that's why you want to see price giving you selling movement inside that you're buying. Like this is a bullish trend. It signifies that buyers are in control, but at the same time, it doesn't mean that sellers will be absent. No, they will still be inside there. They will still be there. But the thing is, the buyers are dominating, but you want to see sellers. So that's why you see this price from here. It came here buying, it returned back selling. It came here buying, it returned back selling. It came here buying, it returned back. It came here, it returned back. So that's how it moves. That's how a bullish market moves. You understand? Do you guys understand? If you understand, just signify. All right. So if you are confused, you let me know. If you understand, you just be dropping it. Okay. So now, great. Right. So with that being said, I think I should move on. So now that we have this, you want to identify all these things, all this behavior of the market. All right. All this market behavior, you want to identify them. So now, when you see this like this, you already know this is an uptrend. The market is going up. Now, all these particular points where the market is taking a reversal. I told you guys about reversal, right? Reversal, we have this bullish movement from year to year, and the price reversed to the downside, went up again. So all these particular points where the market is taking a reversal from, it is called key levels. They are the structure of the market. This is a market structure. This particular point is called market structure. This one is called market structure. This one is called market structure. So to the upside like this. You understand? So there are the key levels of the market you want to take note of. Do you guys understand that? It's very simple. It's very simple. So let me use the rechart. So from here now we have price to this point. Then down. That this point is a key level. This point is a key level, and it came up here. Key level, it returned. Here it returned. Came here, it returned. So that's just it. It's very, very easy to know. So all these particular places, they are called key levels. They are called key levels. So if you don't understand, you just drop on your on the group. Then I will explain again. That's why we are here. So now, with that being said, there's something I want you guys to know about market structure. I'm only explaining the uptrend now, but it is okay. Please explain again. What should I explain again? The key levels, right? Okay, let me explain it again. Let me explain it again. Okay. Now, you already know that market does not just go up. Market do not just go up like this. The way we have this movement here. In fact, see, this movement now that I indicate here is what we have here. If you look at this market from the higher time frame, let me go there. Let's see it. Okay. Now you see this particular movement, this particular candlestick. You see it. No retracement. Oh, okay. Let me explain it like this now. Or more. I'm a little nervous right now. This is my first time doing this, so I'm happy anyway. But at the same time, let's go on. Let's see what we can do. So now you see this particular arrow I draw here, this very straight arrow may just go up like this. Can't you see it's the same thing we have here? So this particular place in this market there's an imbalance. This is seller, this is bearish market. The market just come down since morning. I've been looking at this currency pair since morning. It has been heading down from here, just coming down, came down to this point without any retracement. So now it is not a balanced market. We'll get here soon. We'll explain this kind of market soon. But I want you to understand this particular one now. This particular thing resembles what I even draw for Nabi. It looks like what I draw. Now I say I'm explaining key levels. If you check this particular red candle here, the upper side is called a key level. Do you know why? Do you know why it's called a key level? Because there's something we call break of structure. So now this trend we have here now, this one I draw. Let me map something out for you guys. You see this particular place? It's called a break of structure. I will explain. Now that's why I told you guys to take note of these key levels. That point where the price get to before it reverse to the down, and you get to that point, it reverse to the up. Those points, they are key levels. You take note of those particular places in the market. Like here, price got to this point, it came down to this point. From here, it came up to this point. From here, it came down to this point. Let me draw it out. Look at what I'm talking about. From here, the market came down to this point, right? Can you see it? It came down to this point. It came upward to this particular point, Abi. Then it fall down again to this point. Then it came here again. It came here. So you can see that's how the market has been moving. So let me stop it there. So you can see it. Can you guys see it? If you can see it, just correct. All right. So now this particular point is a key level. So from here to here, the market moved upward. Then this one again is a key level to this point again. Do you know why they are called key levels? Because these are the places where the market changed direction for a while. So it came here. down to this point, down to this place, to this place, to this place, to this place. And if you see, that's how it has been acting before it get to this point and came down here without these key levels. You they come straight. Hope you guys are understanding. Are you understanding me? Please, I will need you guys to respond. Okay, yes sir, I can understand. All right. So now this point here is the key level. All these points where market they change direction, they create reversal. Reversal simply means when something is going this way, it called change to this way. You guys understand that now? It's an English word, reverse. When we say reverse is the case, it means that what you did came back. So reversal has to do with something going one particular way, then it reverse to the opposite direction. So that's reversal. Now, all these points where the market took this reversal, they are the key levels. And why you must take note of them is because of what I want to talk about now. In a trend like this, whether uptrend or downtrend, there's something we call impulsive and retracement move. Impulsive move and retracement move. So that retracement move can also be called correction. Now, if you see this particular market structure I draw here, this uptrend, we have the market from here to this point. Then what happened? It came down to this point and came up again, came down to this point and came up again. So this particular movement to the up is called an impulsive move. Then the one to the down, this particular movement to this down here is called retracement, or you can call it correctional move. The reason why it's called correctional move is to complete market structure. Do you understand? It is to complete market structure. A market is a place where you buy and sell. That's why it's always retracing. So it came up to this point. It completed market structure. This is a buy and sell, buy and sell, buy and sell. Do you understand? So a market is a place where you buy and sell. So you want to see it just creating buy and sell, although it's bullish, it's heading up, but it's going up with impulsive and retracement, impulsive and retracement, impulsive and retracement. So now, another thing you must take note of is that for you to have uptrend, you must have series of higher highs. Let me write it out. For you to have an uptrend is consist of higher highs, H-I-G-H, higher highs, okay, higher, and higher lows. Yes, higher highs and higher lows. That's what creates uptrend. That's what creates an uptrend. So this is why the key levels I talked about is very, very important for you guys to know. Key level no hard though. Just forget the grammar. It's just talking about these particular places where the market took reversals from. Now, if you see here, I said this place is a break of structure. Why is it a break of structure? Because right here we have this place as our high. We have this particular place as our high. Then we have here as low, because this particular place is higher than this point. Now, this is an higher high and this is a higher low. Why is this point called higher low? Because it is higher than this low. So the low just mean the down, the high just mean the up. So from here now, from this particular point to this point, this is an impulsive move, and this is low, this is high. So now the market retraced down to this point, but failed to retrace lower than this point. So it is called higher low because this point is low but is lower than this one. This point is high but is sorry. This point is higher than this point. So this one is called a lower low compared to this. Sorry, higher high compared to this. This one is the lowest point of this trend. You understand? So all this bottom here, all the key levels at the bottom, they are known as low. All of them. This is a low, this is a low, this is a low, this is a low, this is a low. But this low is lower than this low. This low is lower than this low. That's why this one is called higher low, because it's higher than this low. Do you understand? Do you guys understand? Okay. Now, because this low is lower than this low, this particular low, so this particular low is called higher low. It's called higher low. Guys, are you here? Are you guys here? Can you guys hear me? Hope you guys are understanding what I'm saying. Promise you don't understand. Why the emoji? Do you understand? Okay. All right. So now that's it. So now that we have that higher highs and higher lows, now what is higher high? This particular point is an higher high. It's a higher high because it's higher than this high. It's very easy. Just the same way you have lower higher lows. So that's how you have this one too. Now, for you to have higher high, you want to see something in the market. You want to see a break of structure. Now, this break of structure is what we tell you that okay, the trend is still moving. The trend still continues. Like if you see here, this is higher high, higher low. Then this particular place broke structure. It break above this previous market structure points are called key level. Abi? So this is not the new higher high, and this is not the new higher low. Now this break here is called break of structure. Let me show you with the reach out. If you see from here now, from this particular point to this place, the market came down here. This is lower high. This is higher low. This is higher low too. This is higher high. This is higher high. So what happened here? We have a break of structure. You see this particular candle, it closed with the body of the candle above this recent point of this one. You understand? So it's called a break of structure. It's called a break of structure. That's why in most, I don't know if you watch other traders online, you will see something like this on their chart. Then they will have this word inside, BOS. BOS is the abbreviation for break of structure. Break of structure. So I told you, I said this particular tip here, this key level is actually market structure itself. Market structure. So price breaking above it is called break of structure. You understand? It's called break of structure. So now, after this break of structure, we have price coming to this place, then creating another higher low, right? Then another break of structure, then another higher low here, another break of structure. So that's the idea behind uptrend. So uptrend consists of what? Higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Do you understand? If you understand, please react. Just let me know if you understand. Let me know if you understand. Correct. Okay. It means you understand. Now, for the downtrend is also the same thing, but this time is coming downwards. You understand? So I won't spend much time here because with the knowledge of that trend, you guys are supposed to know it. Now, for the downtrend is also the same thing. This is your, but downtrend now no dey carry higher highs and higher lows. They carry lower highs and lower low. This is because the market is coming down, coming down. When we say something is high, it means the thing is above. When we say something is low, it means it's below. So for downtrend, we have lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. That's how it moves. That's how it trends down. Let's look for it in the market. Good. Look at it from this point now. You see it, market from here, come here, created a lower low, come here, lower low, lower high, then lower low, no lower low here, then lower high, then lower low. You understand? Lower high. So the reason why it's called a lower high is because though it's higher than this particular, this one is higher than this one. This one is higher than this one. This place is high, but it's not higher than this. So it's called a lower high. Do you understand? This place is low, but this one is lower than this one. So this one is called a lower low. Oh God, my PC is down. Your battery is running low. Do not want to plug your PC. Oh shit. Oh God. Alright guys, my PC is down. We'll not get live for here. So I think this is the place we'll end this class for today. Ah shit. Okay, let's continue the live with my phone.